This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachurdavis. Thanks for joining us at XM.com. As expected, the Federal Reserve raised interest rates by 0.25% yesterday and flagged further tightening to come. During his press conference, Chairman Powell struck a relatively neutral tone, highlighting the recent progress in the inflation battle, but also stressing that the Fed does not anticipate cutting rates this year. The underlying theme was one of optimism, as the Fed chief entertained the possibility of a soft economic landing where inflation gets squashed without a serious recession. What really caught the market's attention, though, was his reluctance to push back against loosening financial conditions. That was a signal that investors were not fighting the Fed, giving them the green light to load up on riskier assets and flush the dollar down the drain. Stock markets and gold prices enjoyed another sensational rally as Treasury yields came crashing down, decimating the dollar in the process. Euro-dollar hit fresh highs around the $1.10 region once the Fed dust settled, ahead of the European Central Bank's own decision later today. The ECB is widely expected to raise rates by 50 basis points after President Lagarde essentially pre-committed to that at the previous meeting. The question for the euro is whether President Lagarde will also telegraph another 50 basis point move for March, which seems likely considering that inflation continues to rage, while the outlook for economic growth has brightened a little lately with the collapse in gas prices. It will be a trickier affair for the Bank of England, which has to strike a balance between reining in double-digit inflation, while business surveys point to a rapidly deteriorating economy. Markets have almost fully priced in a 50 basis point rate hike, but the decision might contain a dovish twist if the vote is heavily split or the updated forecasts continue to point to a recession this year. There's also a heavy barrage of earnings releases from Wall Street's tech titans today. Apple, Amazon, and Google will all report after the market close, and their results can send shockwaves throughout the entire market, given their collective weight in indices such as the S&P 500. Overall, there's a lot of optimism in the markets, which is not necessarily grounded in reality. The tell that this rally is built on shaky foundations is the leadership. The best performing stocks this year are the lowest quality names, most of which were smashed into oblivion last year because they are cash-burning machines. This was today's Daily Market Comment. Thanks for joining us at XM.com.